Hi, my name is Danny Brown. I'm the CEO of Myriad Real Estate Group, and this is going to be our May market update. So where we stand right now in the greater Phoenix area is the inventory is actually increasing. So we are inching ever so close to about 14,000 active listings. So if you've been watching my videos for a while, we had been stuck for a long time in between this 11 and 12,000 range for active properties in the greater Phoenix area, never really getting more than that because the number of buyers coming to the market was canceling out the number of sellers coming to the market. Get into April and now we're into rates north of 7%. It seems to be that every time mortgage rates go above 7%, we see a decrease in demand. And now we've been in that 7% range for a little over a month. So that is allowing for inventory to grow. And this is happening on a national level as well, not just in greater Phoenix. So we are starting to see inventory increase across the board. And that's mainly because it's taking longer for homes to sell. So when you list a home on the market, it's not selling right away. Those days on market are getting longer, and that's allowing for inventory to build behind it. So the good news for buyers, while rates are a bit higher than what we've been accustomed to over the last year, they are getting more choices for homes because that inventory is growing. So right now we're seeing a lot in the media talking about how home prices are up year over year, several percentage points all across the country. Very few markets are in negative territory. And that's all based on what's called the Case Shiller Index. And the Case Shiller Index, try and say that 3 times fast, only looks at the previous 3 months, so it's not looking at real-time data. So all of the information that they are reporting to us is before interest rates got into the 7% range. So my prediction is that when the next Case Shiller Index report comes out, that we will start to see home values moderate and potentially even come down. And it's really going to depend on how long rates are north of 7%. Jerome Powell just came out and had a very hawkish tone. Inflation is staying pretty stubborn right now. It is not coming down as quickly as they were hoping. It's actually gone up a little bit. And the labor market isn't breaking. So the Fed is feeling very confident in keeping rates higher for longer. That tends to be their messaging. And they're going to be very data dependent, meaning they want to see inflation come down, or they want to see the job market start to suffer and the unemployment rate go up. Until one of those two things happen, I don't think that we're going to see any cuts from the Fed. I think the probability of cuts is much, much higher than the probability of rate increases. So I don't think that we will see the Fed increase rates anytime soon, but I don't think that they're going to cut anytime soon either. So what that means for mortgage rates is that we are going to be in this higher for longer environment where rates are going to be hovering around the 7.5% range for the time being. When the pendulum starts to swing towards buyers, as it is right now, the buyer gets to take advantage of that and can get much better deals than if the market was still moving like it was a couple of months ago. Those buyers were in a little bit more fierce competition for homes, not getting as much out of the sellers. From a buyer perspective, you really can't have it both ways typically, right? So you can't have favorable rates, you can't have a ton of options, and you can't beat up on sellers, right? That's just typically not how buying and selling things work, right? So when demand is low and supply is going up, that's when we see softening home prices. That's when we see sellers giving away most of their concessions. That will transition at some point in time and those rates will start to come back down. So all those buyers that are sitting on the sidelines, which there's a lot of them, there's a lot of pent-up demand out there, when they return to the market, we could see that shift and that pendulum start to swing in the other direction where home values start to increase. Homes are typically more expensive in the future than they are today. So if you can get a good deal today, afford that mortgage payment today, then it's still to your advantage to take part in this housing market because you can beat up on the seller. Unfortunately, in the greater Phoenix area, we never really had our spring selling season. Typically we see that run mid-January through about June. That never really took place this year. We've kind of limped along, and I think that trend is going to continue, if not even pull back some. As we get into our warmer, hotter months, we typically see the market peter out a little bit. People are planning vacations, going on trips, kids start to get out of school, and people just aren't focused on buying and selling real estate as much. So if rates remain where they're at, north of 7%, get into our hotter months, we could see even further pullback in the real estate market. So again, on the buyer side, that's going to cause more price reductions, that's going to cause softer home values, and give those buyers in the market greater negotiating power than they have even today. If you're a seller in this market, again, it comes down to putting out a good product, presenting it really well, knowing that the market is softer now than it was a couple months ago. When we do transition out of the spring season, we always see the sellers riding this wave of appreciation, which they have been. It's been small, but most markets and zip codes that we operate in are seeing price appreciation over the first few months of this year. So they're riding this wave, and if my neighbor down the street 30 days ago sold for $550, well, my home's got to be worth $560. Well, probably not. It's probably only worth the $550, if maybe even slightly below. So you really need to price your home accurately when you're entering into a soft market and there's not as much demand. You need to put out a really good product, and you need to do it up front. I can't tell you how many conversations I have with sellers where they're always like, well, let's try this higher price, or if I price high, I can always reduce. That's dangerous to do, because when you're in a market that is flat or even declining, you have to do something called chasing down the market, where if you price too high and then the market is starting to come down, you have to do really aggressive price drops to catch up. And oftentimes you end up selling for less than what you would have sold had you priced it right the first time. And furthermore, I think that sellers should expect longer days on market. So it's not going to be as often. There will still be multiple offer situations for sure for homes that are in prime locations, priced really well, look fantastic. Those will happen, but they will be few and far between. So sellers going into the warmer, hotter months here in Greater Phoenix should expect higher days on market. So this has been my May market update. If you have any questions, definitely leave them in the comments. Don't forget to give a like and subscribe, and we will see you next time.